Because of the COVID pandemic, the financial markets of the entire world are left in shambles. There were a few that experienced massive crashes, many suffered intense damage, and there were some who tried to cover the financial crises with band-aid solutions, but we know too well how these situations end up. One can only put on these masks as a temporary solution, but soon enough the truth will be brought to light. During the early part of the pandemic, everything was crashing. In terms of the real estate market in the US, people were selling properties which they did not really need. Those who could have gotten break-even deals were happy to push through with a deal, considering that it was still a mystery how long the pandemic would last. And there were also some who were willing to sell at a loss because of the fear that they might need more money because of the negative effects of the pandemic. Because of this fear, properties were very cheap during that time period, and the supply was quite high. After a while, people started to get back up on their feet financially, and those who had money to spare instantly took advantage of the opportunity since house prices were relatively low. Many of these buyers then chose to do a quick flip and started to sell their houses, still at low prices. And this started the rise of the real estate craze throughout the US. A lot were purchasing properties here and there, and it seemed like prices could go high up endlessly. It was during this time that real estate agents made so much money that even those with high-paying jobs were considering leaving their jobs so they could get into real estate dealing. Sadly, it appears now that the real estate boom was all just a bubble, and we know what happens to bubbles. Once they get too big, it will eventually burst. Prices skyrocketed, but only until it reached its peak last June 2021, where prices started to decline. Those who were quick to catch the decline were able to get out safely, but there were a lot who suffered its effect. Once you are trapped in an investment wherein a bubble bursts, it will definitely hurt your investment portfolio. You are then now faced with the daunting question of whether or not you should take the loss and sell the property you're currently holding, or hold onto the property and wait for the best time to sell. If you were to hold, how long would it take? Make sure you stick around for the rest of the video, because this is exactly what we'll be talking about. What happened last June 2021? Why did real estate prices start to go down? Was it really just a real estate bubble? We'll be tackling all these issues in this video. Lately, we've been seeing clues that seem to indicate that the real estate market bubble is indeed starting to burst. We're calling it a bubble because it is indeed like a bubble that is getting bigger and bigger until it could no longer get bigger, and then it eventually bursts. This is what is happening to the real estate industry today. Since the prices in the previous months have been going higher and higher, it managed to reach its highest price point, and now prices are reversing. While the optimism within the market was crazy, and while many thought house prices could go up forever, many also were already predicting that there was a pending crash already waiting to happen. In fact, for seasoned investors, those who have been in the real estate industry for a long time, and for experienced investors and market experts, it was quite obvious for them that what was going on in the previous trend, that there was going to be a reversal anytime soon. Now that the bubble has burst, panic is starting to arise. People are looking to get out of their positions before the rest of the world will know it. People in the real estate industry are already talking about it now, but the general public are not as aware as of recently. Once news starts to spread and the community will know what is going on in the real estate industry and that the bubble is bursting, it will further repel buyers and negatively affect the sentiments of those who are looking for houses. Nobody would ever purchase a home, a stock, or put money into any investment that is currently in a bubble that has just burst. Since the Federal Reserve has taken notice of it too, they have decided to bring out the sledgehammer and smash it onto the real estate market. They are attempting to do this by bringing in more inventory back in the rental market and decreasing the labor market. They're trying to decrease the labor market because once there are less people working in the houses, perhaps it could increase the prices of homes because it will slow down production, thus lessening the supply, and it will increase the premium in properties, since it cannot be just easily constructed. But this move by the Federal Reserve has outraged a lot of people. They're saying that even if employment is not pulled back, home prices will continue to go down because it is just how markets operate and work. It is not about how the number of employees willing to work in a particular sector in the financial markets, but it is the sector itself that is experiencing a crash. However, employment is currently not only experienced in the real estate industry, but in many others as well. What will most likely correlate with this recent rise in unemployment will be foreclosures, not necessarily price change. Price change will follow soon, where there will be too much supply because of foreclosures. I guess it's safe to say that the Federal Reserve is just now noticing that they have been a bit late to the party. Perhaps they did see that a bubble was going to burst, but maybe they just didn't act on it soon enough. Now people are seeing that their reaction time was slow, and they are using almost what we could consider as desperate measures in order to strike balance back into the financial status of the country. But we all understand that because of the COVID pandemic, the government had to print more money in order to keep more people alive and enable them to survive or get through the pandemic. But right now, we're in the time when the government is starting to take it all back and rug pull us all. Of course, the hardest hit in all these are American families and American workers. Some of them were just still beginning to get back up on their feet, but now some of them are facing the reality that they might have to go jobless. Because of the effects of the pandemic, there's now inflation going on in the country, and the government is looking for ways to have it under control. As they implement measures in order to control the inflation, there will be some sectors that will be hit hard as collateral damage, and the housing market is one of them. While Jerome Powell and the rest of his companions in the Federal Reserve have no intention to put people at risk, what they're indirectly doing is actually making lives very difficult for a lot of American families, and killing their American dream. However, some would argue that it doesn't have to be this way. Currently, there's a massive decline in how much people could afford mortgage rates, especially in the higher range, around $400,000. To be specific, for every single percentage point increase in mortgage rates, mortgage declines by 3 to 4 million. Just imagine how many families are going to suffer because of this. According to a renowned home lending expert, Freddie Mac, his estimates tell him that around 15 million potential property buyers were priced out of the market during the bubble burst, because for the first time ever in the history of the United States, the average 30-year fixed mortgage rate has increased by more than 50% in a year-over-year time span. It increased from 3% to 6%. Enjoying the video so far? What do you think is really going on in the real estate industry today? Please do not hesitate to share your sentiments with us in the comments section below. Also, please do not forget to give this video a thumbs up and do subscribe to our channel with notifications turned on, so you get instantly updated whenever we upload amazing new content. Now back to the video. This tells us that the government itself is actively using its strong hand to cripple the housing market. We do not actually know as to why they chose to cripple the housing market or how they go about choosing which sectors of the economy to cripple, but we are seeing signs that they're doing this very deliberately on purpose. And so if you are a well-positioned buyer right now and you're looking around for the best deals you can get on the market, it would be best to be smart about it. Think about this reality. If you buy right now, you'll be going against the trend that the government is going. You'll be going against the Federal Reserve. Now, if you really do have to buy, and if you think you already have the best deal of your life, then by all means go for it. But make sure to keep in mind this reality that you might be going against the desired price movement of the Federal Reserve. Since mortgage rates are continually being increased at a much faster rate than the drop of home prices, American families who are looking to buy homes will have to spend so much more money, which would actually add to the financial stress of high inflation. This forces buyers to be amenable with adjustable rate mortgages, even though they wouldn't have chosen this arrangement. But take note, whenever you cannot get a fixed rate mortgage and you are uncomfortable with the arrangements, then don't go forcing yourself into buying a new house. There are other properties out there that will offer fixed rates, so make sure you choose those properties. The issue right now would then be whether or not the Federal Reserve is on the verge of overcorrecting the inflation. The housing market crash will be made a whole lot worse than what would have actually been needed in order to control the inflation of the country. Well, for Powell, he humbly admitted that it was time to recognize that his current views regarding inflation were merely transitory, and he said that he has finally come to the conclusion that we as a human race still know very little about inflation. As much as the government wants to keep everyone safe and provide for everyone's needs, this manipulated real estate slump could be considered a necessary evil. It might not be the only way, but nevertheless it is one way to fight inflation, and that is the job of the Federal Reserve. What do you think about the status of the real estate market today? Do you think it is safe to buy already? Is it too late or too early? Share your thoughts and opinions with us in the comments section down below. Also, please do not forget to give this video a thumbs up, and while you're at it, please do subscribe to our channel as well, and turn on the notifications so you instantly get updated whenever we upload new videos here on our channel. Thank you so much for watching.